Hi friends, today we will learn a simple day trading strategy called breakout and pullback trading. This is a very common strategy, so many day trading users are using it and it is very effective as well. Okay, so first of all we'll see how to trade breakout. Okay, so breakouts are actually strong trade signals that follow heavy movements in the market. So once the price breaks out, so it will follow a heavy movement in the market. Okay, you can see that if you're trading in a stock, once this stock is breaking out, so there will be a heavy movement in the direction of that breakout. Okay, if it is down, then that stock will be going down. If it is up, it will be going up. Okay, so very fast. Okay, that is what is breakout. So how to trade this breakout? Okay, first we need to mark the breakout price level. Okay, first we will be marking the breakout level. I'll show you how to mark the breakout level. And so usually we will be marking based on the support and resistance. So there are many different ways to identify the support and resistance. So we'll be marking the support and resistance based on marking the breakout level based on the support and resistance. I will show you one of the option how to do that practically in Bank Nifty. Okay, I'll show you that. Then enter the market when the price goes beyond its own resistance and support. So once we are marking, so after marking the resistance and support, right? So we need to enter. We need to when we will enter. So once it goes beyond its own resistance and level support, okay, resistance and support. So that means it goes beyond the level we marked. Okay. So then enter as soon as the breakout confirms. So once the breakout is confirmed, we need to enter immediately. Okay, don't wait. Immediately you enter because it is day trade. It won't last for long. Enter immediately and breakout need a quick entry and exit. As I mentioned, enter immediately. Then use the volume. Okay, you can use, right, we have volume indicator, so use that indicator to confirm the breakout is fake or not. Okay, we can actually check the volume. If volume is high, that means it's a strong breakout. If volume is low and breaking out, means it is not a there is a chance of fake breakout. Okay, don't trade that breakout. Only trade a breakout with high volume. Okay, don't trade other breakouts. Okay. Okay, now you know what is a breakout. Okay, now let's see how to trade this breakout. Okay, first for that trading, first you need to select one stock. Okay, either stock or index. It's up to you. So I'm mostly trading in index. If you want to trade in stock, you can do that. Okay, in whatever it is. Okay, either stock or index, whatever it is. What you have to do is you use candlestick chart. Okay, then in that candlestick chart you select 5-minute time frame or 15 minutes time frame. Okay, 5 minutes time frame or 15 minutes time frame. Then you have to wait. Okay, so the opening at 9:15, you are waiting for if it's 5 minutes chart, you are waiting for 5 minutes. You can see the first candle, green candle or red candle, whatever it is, you are waiting for 5 minutes. So you will get a candle. After 5 minutes, you will get a candle. Okay, so if it is 15 minutes again, so you will get a candle after 15 minutes. Okay, I got a candle is green now. Okay, in this representation I am putting it as green. So now you can see one green. So after that one more candle, 10 minutes. Okay, because the first candle, right, you can see the first candle is, I'm considering this as opening range. Okay, in that 5 minutes buyers and sellers were fighting and they created a candle. Okay, if sellers are winning this, then it will be a red candle. If buyers are winning, then it will be a green candle. Okay, now it is green candle because buyers are more, so we have green candle. Okay, and a solid green candle. Okay, that means buyers are very strong. Okay, so now we have one green candle. Now again we are waiting. We have the opening range now. Okay, you can see the top and bottom. Let's say if it is Nifty at 19,500, then let's say if it is started from 9,500 to 9,550. Okay, then the range will be 9,500 and 9,550. Okay, then we will be waiting for this range to break out. Okay, so this range to break out. Okay, this method of trading is called opening range breakout. Okay, ORB, opening range breakout. Okay, so let's see, this is one of the example I'm saying. Breakout can be anything. Okay, it is not only opening range breakout. In between day also it can happen. So anywhere it can happen, the breakout. Okay, so this is opening range breakout. This is one of the common strategy almost all the traders are using. Okay, this is very effective as well. So you are waiting for 5 minutes, so then you will get a candle, then again you are waiting to break out that candle. Okay, so now you can see the next candle is green, sorry, next candle is red, and that is a pullback actually. So because buyers are buying, so in the morning candle, right, it is 15 minutes morning candle, so somebody will be using the BTST calls, and also yesterday they bought and today they got a good profit, and they will be coming out of that trade because they don't want to take any risk in this trade, so they are coming out. That is why this small candle. Okay, and as I said, you can see, right, the volume is less here. The volume for the green candle will be more and the red candle will be less. Okay, because the buyers are more and sellers are less. Okay, the volume is very less for red candle, and volume is high for green candle. That means we have one candle with strong buyers and some weak buyers are there. They are actually taking the profit. Okay, so then you can see the VWAP. Okay, VWAP is actually volume weighted average price. Okay, there is an indicator you can see in any tool you are using. If it is trading view or anything you are using, your broker will be providing some kind of chart so that you can see the VWAP indicator. So if you want, I will show you how to use this VWAP indicator. It's very effective. So if it's a stock, make sure that you are above VWAP. Okay, above VWAP means it is bullish. Okay, when you are trading bearish, make sure that it is below VWAP. Okay, so you understand there is an indicator called VWAP, and you should be above VWAP in case of stock. Okay, so index it is okay. Index also it is fine, but I would suggest it is fine trading, right? You can go for it. So you are actually make sure that you are in index also. You make sure that VWAP above VWAP, and you are actually entering where you are entering. So you have one green candle, one red candle, that is a pullback, and you are breaking out. Okay, that is the first candle top of first candle is your breakout region. You are marking that price. You can see that entry, right? So you will be entering in this price because you are breaking out. So once this is breaking, the movement will be very fast. Okay, you can see a big movement because buyers are there. Whoever is there with a weak hand, so they will be selling it here. So all sellers are gone now. Now only buyers. So it will be very fast. Okay, it will be going very fast to the top. Okay, you can see a big movement in the market. Okay, that is what is opening range breakout. If it is the same case down as well. Okay, if this is happening below this candle, okay, you can see opening range low. So if this opening range low is breaking, then you have to you have to buy PE. Okay, put option you have to buy. If it is going up, then buy call option. Okay, better in this kind of trade, always better to buy call and put. Okay, either put or call you have to buy. Okay, don't try to sell, because the selling, this is very fast movement, right? The fast movement you will get more money than more money in CE than PE. Okay, CE won't reduce that much, but PE will be increasing too much. Sorry, the call option will be increasing too much. If you are selling that call option, let's say if it is breaking down and you are selling a call option, the decrease will be very less. Okay, very, slowly only it will decrease because time, everything is there, so it won't decrease much. Okay, so better in this kind of trading you use uh, buying option. Okay, not selling option. Okay, that is one kind of breakout. Another breakout I will tell you. So this is again, so in between, maybe you are trading in the morning, you are seeing one candle, and you can see like that candle is going. So there where you are seeing the consolidation, you can see the consolidation, right? So consolidation means in the initially you can see the volume is increasing. Okay, the volume is increasing. That is why multiple green candles. After that, so once we are in a certain price level, there will be sellers. Okay, so there will be sellers in the sense they are also weak hands. They will be taking the profit out. Okay, maybe somebody ended in the morning or yesterday, so they will be taking the profit and this candle, the third candle. Okay, from there you can see couple of green, red, because there is a kind of a tug of war is happening between buyers and sellers. So this is because since we have this much buyers, mostly buyers will be buying in, buyers will be winning in this tug of war. Okay, so in that case, what will happen is this is called consolidation. Okay, buying first selling is happening, sellers are winning. Then buying is happening, buyers are winning. Sellers, buyers. From there, the sellers will be finished because we have enough buyers there. That is why we are actually buying after breakout, right? So we have one. This is okay. It can break down as well. It is not only breakout, so it can break down as well. But this breakdown we will not trade. Only breakout. The upper level we will trade, because below we cannot trade. Below, if you want to trade, it should go below opening range low. Okay, you should not trade here. If it is going down inside the candle, you should not trade. If it is going up, okay, that means it is breaking out. You can enter here. This movement also will be very fast. Okay, so because this is actually, you can see the opening range here also, it is saying opening range. So this is 3 candles, so maybe 15 minutes you have to wait. After that there will be a consolidation and it is breaking. So here you can enter. Okay, maybe it will happen afternoon only, so maybe it will be happening at 12 o'clock, 11 o'clock. You have to wait a long, okay, for this kind of a setup. So once the setup is ready and it is breaking out, definitely this will be a huge movement. Okay, up or down, it will be a huge movement and you can make good money here. Okay, so make sure you are don't trade in between, because you, when you are waiting, you will tend to trade actually, right? So when we are waiting, we will be seeing different patterns, different things, and you will be tend to trade and you will be losing. Okay, don't lose there. So wait for it. If you are trading this breakout, wait for the breakout setup. So once the setup is ready, trade then. Okay, so then you will get a good profit. Okay, you can make a good profit with this strategy. So most of the times you will be getting this opportunity in market. Okay, you can use this. This is breakout. Next, let's learn pullback. Okay, a pullback is a price movement that moves in against the trend. Okay, it is going against the trend. There's a master trend. Let's say if it is a strong uptrend, in between you will get a small slight pullback. Okay, so that will be against the trend. Okay, it's a temporary price movement before it resumes backs into the main market direction. Okay, it's a temporary price movement. It is not a permanent one. It is not a reversal. It is just a pullback where the weak sellers will be selling their price. They're selling their holdings, and the price will be coming little bit down. Okay, it is not a major correction, but you will get a small pullback. Okay, so trading pullbacks lets you have a tighter stop loss as your trade location is good, and this gives you a better risk reward. Okay, I will show you how you will get better risk reward and better stop loss position. Okay, a good opportunity to buy pullback is just after the breakout. Okay, so always better to trade pullback just after the breakout. Okay, just after the breakout you will get a pullback. Okay, just after the breakout, in the sense may not be as in the same candle, but maybe after one candle or two candle you will get pullback. Okay, so then you will get better stop loss option as well. So after that pullback. Okay. Now let's see this pullback in a diagram. Okay, you can see the range breakout, right? So this is what we discussed in breakout. Okay, there's a range consolidation is happening, the range breakout is happening, and the breakout buyers will be buying here. The market will go up. A couple of green candles if it is going up. If it is going down, there will be a couple of red candles. Then what will happen? So whoever bought here, right, in this candle, in the first candle, in the breakout candle, they will take their profit. Okay, so weak buyers will be taking their profit there. Okay, after a couple of candles, they don't want to take any risk. They will be selling there. Okay, so then we will get a pullback. Okay, pullback means a small red candle. So you will get a small red candle. So where the weak sellers will be selling the positions. So then you can enter there. Okay, in that pullback you can enter, or you can wait. Again you can wait. So once that pullback is finished and the top range, right, the price breakout entry, you can see, right, that range is breaking, there you can buy and put a stop loss below pullback entry. Okay, that pullback, where that pullback, so till that pullback point only sellers there, no? So before that it was buyers, and after this price breakout entry also there will be buyers only. Okay, so you can put a pullback stop loss below that. So in between you can see one oval shaped, green color oval shaped one, right, point. So where you can put a break point and you can ride this trend. Okay, from here we are expecting a large movement. Okay, all weak hands gone, now only we have buyers, so it will be a huge movement. Okay, so that is how we will trade pullback, and I'll show this in Bank Nifty as well, how to trade this. Okay, now let's see some examples in Bank Nifty. Okay, so this is 2 days chart for Bank Nifty, and in the first chart you can see it is consolidating. There is no breakout. Okay, it is consolidating, and how we identified this consolidation? See, there are two candles in the early morning. This is a 5 minutes candle, so you can see in the early morning there are two candles. Okay, and we marked those two candles here and waiting for the breakout. Okay, and we waited till 3:30, but there is no breakout. Okay, it was in a range, it was running. Okay, this is very good for sellers. Okay, whoever is selling option, this is really good. Okay, not for buyers. Buyers, they will lose for sure, but for sellers it will create a good profit. Okay, this is good for the sellers. And the next day you can see, okay, we marked our range here. In the next day the top level we marked, and the bottom level also you can mark, and you are waiting. Okay, you waited for a couple of minutes, maybe it will take 1 hour, 2 hours, so I don't know. So after couple of minutes, so maybe after 11 o'clock you can see a big candle on the going top. Okay, big candle going to the top, so that means it is a breakout. Okay, it is actually breaking out the opening range. Okay, there you can buy. In the first candle you can buy. Okay, after that consolidation, that is the consolidation I was talking about. So first candle green, then there is a consolidation, after that it is breaking out. So in that candle you can buy. Okay, and you can see how fast it was moving to the top, and how big candles it created. So it will, if you are buying that candle, you can get a huge money here. Okay, this is, see, it will be 100, more than 100 points move. Okay, not even 100, 200, 250 points move. Okay, you will be getting that money, and you can keep your stop loss below the first candle. Okay, so this is, as I said, a breakout. You have to enter immediately and exit after it reaches a certain level. Okay, because you need to identify the support and resistance. On the top you need to mark your resistance. So once it is reaching that resistance level, so you have to get out of the trade. Okay, and also another option is like, so whenever you can mark the pullback as well. So if it is going below the pullback level, you can get out of that trade. Okay, so first after you can see, after two candles you are getting pullback, right? You can mark that pullback. Okay, mark below that pullback. So if that anywhere after this breakout happen, if after that, okay, once that pullback is happened and one green candle is created, right? So if it is going below that pullback, you should exit. Okay, that is one option, you can exit. Another option is you can mark the top resistance level, wait for that this buying Nifty to reach that resistance level, then once it is reached you can get out. Another option is, actually after pullback you will get a sudden move, right? Then you can book half of your profit, and move your stop loss to the price where you ended. Okay, so you already got half of the profit, then put your breakpoint in your price, so where you ended. So let's say you ended at 100 and it moved to 125, so you book half of your profit and put your stop loss at 100. So what will happen? If suppose market is reversing and coming back, it will hit your stop loss at 100, but still you got 12.5 12 plus points, right? Because you booked your half of your profit at 25. Okay, that is another option to exit. Okay, so this is how you how to trade breakout. Okay, and this is one of the good option as like you can put your stop loss, because that is how people are actually following the trend. Okay, so you can put your stop loss below the pullback. Okay, where it is pulling back, you can see the below that candle, you can put one stop loss. And another option is you can see one uh, blue line in my chart, right? That is actually the moving average. Okay, you can mark moving average. So whenever the chart is coming, candle is closing below this moving average, that time you can exit. That means the trend is actually reducing. Okay, so trend is, if it's an uptrend, it is actually the trend that is reducing, and it is slightly, it is changing. Okay, that is the meaning of closing that candle below a moving average. So that time you can exit. So any option you can choose, it's up to you. So you decide which option you want to choose for exit, so you exit in that way. So this is one good option, moving average. So many are using moving average for entry and exit. So because if you are entering, so you must be above moving average. Okay, so this is 20 EMA or maybe 50. So anything you can choose. Okay, if you are following one moving average, follow that moving average strictly. Okay, now you can see many different moving averages in market. So if you are moving one, so if you are choosing one, choose that and strictly follow that. And another option is actually you can, if you are buying 5 minutes candle, then go to the 1 minute candle. Okay, and put your stop loss in 1 minute or 3 minute candle. If you are buying in 5 minutes and putting your stop loss in 3 minutes above, below your moving average. If it is you are selling, then below your the chart is crossing your moving average, that time you exit. Okay, so that means if the candle is going above moving average, means that trend is gone, the below the downtrend is gone, and it is the price is going above that level. So there is a chance of reversing the trend. Okay, that is another option. So maybe I'll put a video on this one. So how to put stop loss and how to handle this. Okay, so it's a vast topic actually. There are different ways to do this. Okay, so trend following one option is there. So selling option is there. Buying option is there. Then as I said, below pullback you can put some put stop loss. So there are many options. Okay, maybe in breakout, that below that candle you can put. Maybe there are few people are using like 60% of the candle. So there are many options available in market. Okay, maybe I'll take a session on that separately. Okay, now let's see an example for pullback. Okay, this is also a bank nifty chart. Okay, so where you can see the pullback. Okay, first candle is there and a small consolidation inside that candle. We actually marked the upper level and lower level. So then once it is breaking, the upper level is breaking, we are not buying. So again it is actually consolidating. Then you can see a pullback to the where the breakout happened. So from this pullback we will be buying. Okay, from this pullback you can buy, or you can wait. As I said, you can wait till the pullback is breaking. The pullback and the pullback is happened, and after that it is breaking, right? That time you can buy. Okay, but maybe so for better opportunity you can buy when the pullback is happening. Okay, and you can put a stop loss below your. In this case, I'll put stop loss below my that large candle, the breakout candle, right? Below that candle, you can put, maybe it will be only 10 points or 5 points or 10 points max, that stop loss. Okay, so in that case, you can easily get a good profit. So you see how after pullback how the market is moving. Okay, so it will be going up. So yeah, the stop loss you can decide, like in your trend following you can decide the stop loss actually. So maybe how you are following, it is based on EMA or based on some other criteria you are doing it, or you are partially booking the profit. It's up to you. Okay, so I'll be taking a session, as I said, I'll be taking a session on this one, on the stop loss. Okay, in your trend riding. So you can ride a trend actually. So see, in this after this breakout, right, market can go any extent. Okay, it's not just one or two candles. Sometimes it will be going very fast. Okay, it will be going very fast and it will be going very far. Okay, maybe 300 400 points, or if you're booking in one or two candles, you will be getting 20 30 points only. Okay, it's always better after a breakout you should be riding the trend. Okay, then only you can make a huge profit. Okay, so yeah, so for that, how to do that, trend riding, how to set the stop loss and where to book the profit and how to book the profit, all those things I'll create a separate video and will tell you. Okay, so this is how we are trading pullback and breakout. Okay, hope you enjoyed the video. Thank you.